Happy Friday, everyone. My name is Matt Cincerello, and I'm the owner and managing partner here at U-Nique Accounting. You can learn more about what we do by visiting us at u-niqueaccounting.com. While you're there, I recommend you check out our free stuff page where you can read our blog and also download some free guidebooks like the top 10 cash flow mistakes that can cripple a business. Also, if you're wondering what I'm drinking today, today's beverage of choice is wine. It's Friday. And if you notice my cup, it is bearing the hashtag Make Today Count. This is the slogan for My Best Friends Foundation, which is a close and personal not-for-profit that I'm a board member of. A link will be provided to a form that you can fill out if you or someone you know is dealing with the impact of cancer in their life. So let's go ahead and jump into today's topic. Today's topic is why your restaurant P&L is so important. So if you want to see an example, I recommend you check out our recent blog article where you can download a free template. So the P&L tracks a few key areas of your business financial performance, including your revenue, your COGS, your gross margin, your operating expenses, and your profit margin. So first, let's talk about revenue. You are a business owner. You know what your revenue is. Don't feel like I have to explain this one. So let's move on. However, in the area of revenue are negative sales, also known as discounts. So let's talk about this one. There is nothing wrong with discounts, okay? They're not illegal. You don't need to hide them. There's nothing wrong with putting them in your software correctly. So stop hiding them. If you hide your discounts, then you can't analyze your beverage costs versus your beverage sales or your food costs versus your food sales correctly. So just put a button on your POS, each kind of discount you want to provide, whether it's a industry discount to fellow bartenders or an employee discount or many other options. Just put in your POS so we can track it, and that way you have a correct cost per sales analysis. So the next section of your P&L is your cost of goods sold, also known as COGS. These are your prime costs, and this is where the most important part of your P&L's financial health is. And using an accounting software like Xero will set you up for success to track and analyze your food costs versus food sales and your beverage costs versus your beverage sales. Yeah, you'll get no help from QuickBooks here. So if you own a bar or restaurant and you're using QuickBooks, I highly recommend that you check out our videos on the 13-period accounting method and the Xero for QuickBooks summary videos. Now, COGS is where the bulk, if not all of your labor costs show up. And while margins will slightly fluctuate depending on the type of restaurant or bar you are, you should be shooting for a minimum of 40% overall gross profit margin to hit a decent overall profit margin for your business. Again, minimum 40%. The next section is your operating expenses. And these are where your controllable and non-controllable operating costs of the business are, like advertising and rent and supplies. You really want to pay close attention to your spend and your trends here, as this is where you have control over many of the items. Now, while you necessarily can't remove the costs, you can negotiate and keep them in check. The last area I want to talk about is profit margin. While some industries like breweries operate at a high profit margin, restaurants, on the other hand, can struggle in this arena, and margins can be 5 to 15%, but typically this industry sees 5 to 8% profit margin. And this leaves very, very little room for error. Now, we at U-Nique push our restaurant entrepreneurs to go for a minimum 10% profit margin. And the reason for this is it helps them achieve a positive cash flow and gives them the ability to keep their facility in top operating condition or to expand beyond that one location. So why overall is the P&L so important? So number one, it helps keep your finger on the financial pulse of your business. One little hiccup in your prime cost can destroy months and months of profit and can put a detrimental dent into your cash flow. Never, ever take your finger off the pulse of your business. Number two, it can help uncover hidden opportunities. By looking at your spending categories, you can pinpoint areas to take action so you can keep your costs in check and your profit margin healthy. Number three, it can help measure the impact of your marketing campaigns. It'll let you know,
hey, was that recent marketing campaign worth the effort? Was it worth the cost?
Your P&L will help you do that. Number four, your P&L can help you plan and predict like a pro. And number five, it can help you stay accountable and compliant. By looking at your spending categories, you can pinpoint areas to take action and to keep your costs in check. And again, your profit margin at a healthy level. Overall, it will help you make important decisions with confidence. So thanks for listening to our advice on why the P&L is so important for your restaurant. If you appreciate our advice, please remember to like our video and subscribe to our channel for future content. Until then, remember, don't conform, stay unique.